I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market put on another strong showing this week as investors hope for even higher prices on overall strong earnings. Of course, we know the earnings better be good, as the market is at historic valuations. Oil surging over $83 a barrel and interest rates moving up meant nothing as buyers went into a frenzy with nary a 1 hour bar that ticked down all week long, if you follow 1 hour charts. There were brief downticks in some after-hours trade, especially after China showed that their growth slowed on Monday, and then Johnson & Johnson and Procter & Gamble showed weaker earnings and margins, and we expect a lot of margins to be poorer because of the supply chain interruptions going on. And Netflix, well, they showed a slight slowing in their sub-growth, but just a minor blip on the downside brought buying in, and that pushed Netflix up to an all-time high. Similar thing happened for Tesla as their sales showed a little bit of slipping on their growth rate, and that stock ticked down by a little bit, but then it moved up to all-time highs. Simply, buyers grab on to any downtick. We'll see if they're going to do that here on Friday because the market is starting to slip a little bit. Well, unless you're IBM, which just can't get out of its own way, can't make the turnaround and no traction in some key areas of its business, and that stock had a big break, and that one probably is headed to 123 or lower. Also, PayPal. That one is really, I would call it kind of ridiculous news. The rumor is they're in talks to buy Pinterest. And as far as investor goes, it's like they're sticking pins in their eyes. Get it? Pins? I bet there's actually not going to be a takeover because of this very, very sharp downside reaction in PayPal. So we'll see how that goes. But even comments out of Fed Quarles that said more government spending is going to equal additional transitory inflation, well, that couldn't really break the trance of the stock market buyers that have been in here all week long. Interesting to hear Quarles use the term transitory again. Additional transitory inflation. Is all inflation transitory? Well, that's the way they're trying to make it out. I think the past Fed leaders, if you go back all the way to Volcker, would probably laugh at that. The surprise came Friday morning as Evergrande came out and they said they made their interest rate payment, which was a month late, on dollar-denominated bonds. And that lifted stocks out of a hole that they were in overnight on the Intel earnings miss. That was horrible. They said that their margins are going to be bad over the next couple of years, and that stock fell quick 11% to the downside. So there was some very significant earnings news that came out that wasn't so good later in the week. And the market really basically overall has ignored that. Snap came out, and that stock was absolutely crushed. They say that they're having problems with the Apple privacy changes on Apple's advertising, and that stock collapsed 25%. And that's dragging down Twitter and Facebook, as they are, well, related. And stocks overall, well, they slipped here on Friday around midday when we're doing this recording, as Powell came out and he confirmed that the taper is on track. And also said inflation is likely to go into 2022 and then abate relative to the improvement in COVID. Again, transitory. So while buyers are tripping all over themselves to spend all the cash that they can, whether it be cash or taking on more of this massive margin debt, they do that to own stocks and crypto, which is really coming apart these last couple of days, down about 10% from its peak. There is something to ponder here at all-time highs. An important chart that I look at that hasn't been all that important recently is the junk bond market. I want to take a little peek at that I think you're going to find interesting here when we look at it. And I find it interesting, and we may be looking at something important right now, again, as the stock market is at all-time highs. This is a chart of HYG. We're looking at the weekly cycle analysis on here and an SPX comparison. This candlestick chart that you see here going back all the way into 2010 is the HYG. And this line chart that you see right over here is the S&P 500. So what I want to look at here is something that I think is important, and that is the high yield bonds tend to be a tell for the stock market. We're going to look back at important periods in here, looking back at 2011 and a period of around 2015 and 2018. That's what we're going to focus on here, and that's when the junk bond market took a hit. During those periods. So that's right in here, and then right in this period right here, and then again right in this period right in here. We're not going to pay a lot of attention to this because this was anomalous. This was the COVID pandemic break, and that was mostly just a blip on most of the charts. But we're focusing on these breakdowns right in here and right here, and to see how that related to the stock market. So let's just look back at this period right in here when we're looking back at 2010, 2012. The key thing we're looking at in here is a cycle pattern. Here's a cycle from low to low, a cycle from low to low, and a cycle from low to low. The key thing is when the cycle breaks the important low level and then turns down, now we're designating it with these arrows right over here, that sets up a period of stock market problems. So I'm just going to blow this back out so you can see it a little bit clearer and see what I'm looking at. Those stock market problems, and you can see that right in here. I'm just going to circle this for you in red so you can see. As it broke down right over here back in 2011, that was designating a problem for the stock market, which was really right in here, where the stock market through all of 2011 had a very difficult time. So a breakdown here, which designates higher yields in the junk bonds, brought you this period right in here of about a year of problem for the stock market, which had a pretty significant pullback there, actually kind of a mini bear market. When you look over here where you see this period of a breakdown right in here, where it got below that low and below that low, that set up this period right in here. Now this was about 14 months, 15 months right here where the stock market had a lot of problems, and there was actually a pretty good break in there. Actually, there were two of them that both about 16, 17, 18% and about 20% that you came to when you had this breakdown. That's right in here, and that was where the stock market had a lot of problem. As you see these breakdowns here on the HYG, and then the stock market had these problems during that period right there. That isn't really lined up well, but let me just do that for you right there. So that's the about 15 months where the stock market troubled, actually had two big sizable down moves there at that point. And the last one we're going to look at actually is right in here. We could see that in 2018. And the end of that was actually the taper tantrum that you had back there. But really signaling that was a key breakdown in the cyclical patterns here in HYG, which is high yield. And this signaled this period of problem right in here. So you had this period of about a year where the high yield bonds were weak, and the stock market had a problem. Right in here, stock market had a problem. Right in here, the stock market had a problem. Now let's look at present time right here. So the stock market, which is this upward line, continues to move up, but this is really what's key. I want you to see the cycle patterns right in here. So this low is this low. This low right over here is this low, and this low right over here is this low. They are spot on. You can also look at this one and this one and this one going all the way back. We have almost perfect cyclicality, and you now have a breakdown. And that's what that arrow is that's showing you right in there, where it has now broken down that key level right there. And that, in our opinion, is setting up a period of finishing this cycle on the downside, maybe another cycle on the downside. And that takes you out to that mid-year period that we're looking at, that you might have a stock market problem. So you had that happen, and here in all of these periods there that we signal, those three periods right there. Let me just blow this up so you can see that. Those three periods where the high yield bonds started to move down, had breakdown, a bad year, breakdown in here, a bad 15 months, breakdown right in here, and then that signaled a rough about a year, and now you have a breakdown right over here. That's a bad sign when you look at that, and that to me is suggestive of the fact that you have a stock market that at all-time highs is risky, and we know that. And I've showed you so many times all of the historic valuation problems that the stock market should have moving forward. And I've also shown cycle patterns that go out to 22 to 23 that should bring some struggle for the stock market. So right now, for the stock market, buyers are in a panic. We see that. And there's probably more to go on that. And I'll show you some of that as we get into the stock market analysis. But this move right in here, I think, is signaling a top. And when I look at those high yield bonds on that HYG, it has a small breakdown already, and that's the very beginning of what tends to be a problem for the stock market, as I showed over the last 10 years. For the week, the stock market major indexes are gaining about 1.5% to 2%, depending on what index you look at. Maybe a little bit less now as the markets give it some ground here on Friday. 30 years gain about a point and maybe a little more. The short end, fall about a point. The short end is even weaker as the yield curve flattens. So the 10-year yields have gained about 8 basis points, and that's a pretty big gain for interest rates this week. The gold and silver market were having a great day here on Friday, but then when the news came out about Powell, they took a pretty good hit. But still, for the week, gold's up about $20, and the silver market up about $1. So that's a good percentage gain. And for our level 3 and 4 members, we're going to be updating those charts. And the silver chart, which we showed you an alternative, actually does look like it has an improving pattern in there. Dollar down about 0.3% for the week. And that's, of course, helping the metals. But we think the dollar is about to start to move up again. And that might have the metals not being able to have any kind of a runaway here. And for oil market, that gains about 10 cents on the week so far. It did make a high of $83.96 for light crude. And we see a potential in there of even $92 in the coming year. So we think the oil market can stay strong, as it's been incredibly strong. I want to note that I read an article this morning that almost blew me away, that in California there's areas where regular unleaded gasoline traded to or offered at $7.59 a gallon, and premium in the mid 8s. Well, that is absolutely incredible. How does anybody live in that? Well, I'm not going to say too much, but you know how I feel about socialist economies. Coming up, we're going to look at a preview of the stock sectors that Arvi does fantastic work in, and then I'm going to bring you that analysis on the stock market. I want to remind you that you can go to the askSlim website and become a free member if you want. Learn a lot about askSlim by just doing that. If you're watching this on YouTube, please do subscribe to the channel, click that notification bell, and do like this video. Give it a thumbs up. If you're on Twitter, follow us at askSlim. And for membership info, questions on our huge offerings, specials, and education and analysis, please write Matt at askSlim.com. All right, we're going to look at a little preview here. Arvi, our lead cycle analyst, every other week does stock sectors, and then on the alternative weeks does analysis on international markets. And what we bring you is a preview of that, so you can get a good sense of what that video looks like, what the analysis looks like. That you can see that if you're a level 2, 3, or 4 member, and of course get our entire video library, over 500 videos in there. In fact, it's probably well over 600 right now. It's a habit of saying that that I have produced and RV has produced, so we have a great way for you to learn our type of analysis. So here's that special preview looking at the communication sector at Charter and at telephone, AT&T.
So this is Charter, and what we have here is, if I zoom out, you can see fairly clear longer term patterns. Now, this has been in a long-term uptrend, but as we highlight frequently, this really formed off of this basing cycle back here, back in late 2018 into early 2019. This higher low is really what set up that really nice base. Yes, we had this large sell-off during COVID, but absent of that, this has been in a really nice long-term uptrend here in CHTR. What's going on now is that we are due to form a bottom. The low is due 10.11 to 12.6. You can see this is really just a flag that's forming. We basically retested that old breakout level that you can see right here. Let me draw that horizontal line. You can see we're just really retesting that old breakout level and are now bouncing back up. So overall, our bias would be favoring the long side here in Charter. We are waiting for this weekly momentum to turn back up on the upside. It is currently negative, so that is something I do want to note. But given this nice morning star that we're seeing on the weekly time frame, that does likely indicate a bottom that has formed. On the upside, we are looking for a move into this top of this red zone, into this horizontal line right here. So this is the intermediate term 50 to the 61.8. So that comes in from 755 to around 772. If it gets through that level, next level up is the 78.6. If that level gets taken out, the next level is the recent swing high here at around 825 or so. So a really bullish overall pattern here in Charter, and one we will certainly keep an eye on to the long side for our trade ideas. So this is AT&T, and what you see here are really very clear longer term cycles. So this is a very long cycle. If I highlight it, you can see that this is a 32 bar cycle, which is broken into minor 16 bar cycles. And what you'll notice is that there was this really nice base that formed right here with the higher low relative to the prior low, and then we very quickly broke out on the upside in this next rising phase. After that, we had the large sell-off on COVID, and since that point, this name has been really very broken here, as we've really just been vacillating in a wider range. What's going on now is, if I zoom in a bit, you can see we are in a left-hand translation once more with an early high that formed in this dominant cycle, and we are now in a corrective period for the rest of that cycle, very likely, with that next low only due out in early to mid-January. Now, one thing I want to highlight is this minor cycle right here. We have a minor cycle low due. So given that our dominant cycle is in a left-hand translation, this minor cycle and this rising phase on that minor cycle will likely form a bear flag in the context of negative momentum, and then we will look for this to turn back down on the downside to complete that dominant cycle, which is already pushing down on the downside. So that's really how we use both longer term cycle patterns as well as minor cycle patterns in order to come up with a sum of the evidence. So I really do hope that that was helpful. On the upside, we have a zone here from 2665 up to around 2760. That's the zone where we will look for AT&T to fail and then roll back down on the downside. If I bring down this axis, you can see we have an intermediate term fib target zone from around 25 to 2390. So that's really what we're looking at in terms of our downside targets in AT&T.
Great work, RV. Boy, those charts are a thing of beauty when you look at that. Talk more about cycle analysis in just a moment, but you can get the clarity of this style of analysis by what RV presented at that time. So just absolutely great stuff. If you do want to learn cycle analysis, of course, I don't know another place that you could learn it other than right here that we teach almost every single day. You can, this is a final offer right now. So this only through this weekend are we offering our special on our cycle analysis workshop. You can learn the askSlim method of analysis that I have developed over 47 years and shared with countless, really thousands of traders out there. And we've had many, many people that have taken our cycle analysis workshop. This is something that took me 2 years to write and over 6 months to produce. Produced 20 video modules that go over very, very key aspects of this style of analysis. Plus, if you subscribe to this, you get many of our tools for text videos. So you'll have hours and hours and hours, like 30 hours plus, of watching to learn what we present. And once you do this, you will never look at charts the same as before. This is a learning experience that you'll have no other opportunity like this. And we're going to actually do a special November 23rd, a live event for the workshop members to be able to answer questions around this and present some of the work so that people can improve the way they do it. You can go to askSlim.com and workshops for more info. That's in the top navigation. There's a front page link to subscribe. Now, this is a 46% discount, the lowest price ever for this, and this will never be back at this price again. This is the final couple of days here. So if you do want to become a workshop member, learn this style of analysis, do go to our website basically right now and subscribe. Matt has a demo reel he could share with you if you want to write to Matt at askSlim.com, which shares some clips of some of the videos. So you'll get a little bit more information there. And the table of contents is available and a video that I produced on our navigation page for the cycle analysis workshop right on the website. So you can learn all about this style of analysis by going and watching that stuff, and please do subscribe. Charts will be so different to you when you look at it, because it really, you'll understand the energies of the movements that are in the market and how to improve the way that you see things, your entries and your exits and your trade decisions as far as the direction goes. So much will look different to you. So please do take advantage of this unbelievable discount and subscribe right now. All right, so we're going to look at the stock market analysis here as we look at the intermediate analysis for the S&P 500 and the Nasdaq. Markets, of course, have been exceptionally strong, and we want to look at what the conditions are of the market, talk a little bit about our analytical style, and how you can, going forward, apply the information that you get from us to your own style of trading. So key aspect of what we bring is the ability for you to do that. Here is the S&P 500 looking at the SPX, and this has our cycle analysis on there. Just for your understanding, there are three major components to our analysis. One of them is cycle analysis, which is looking at the rhythms in the market. On the bottom here is a drawing tool called a cycle bracket. And what this it helps us is the average length of cycles. And the big one is the dominant cycle, the smaller one is a minor cycle, and together they make what is a harmonic family, just like music. And you can see the rhythm in the market of money flow right in here. So that's the first component of our analysis. The second one is momentum conditions, where we look at two main momentum indicators that we have. The one that you see here on the weekly, and we use that on other charts also, is called the reversal scout. And this helps you understand the momentum and kind of scouts out changes in the market conditions. When you get a downward turn like this, and then it turns up as it did right here, it confirms the low right over there. Here, there was no downtick through that correction. You can see how strong the market was, and then just basically a little flattening out and an upward turn again. Here's where it turned down right over here, and the market went into a 1 month very modest correction of only about 5.2%. And then the third part of the analysis is what we call swing high, swing low analysis, and that is where we use the information we have on the charts, important levels, and then look for the support and resistance levels and the extensions in here based on the movements in the market. So we project out levels that we think the market can move to. And then what we want to do is we want to establish market conditions, which we do, and we show you here. We go into much more detail in other aspects of our membership site. So what we have in here, as you can see, there's a minor cycle right in here, and it's been running about 11 weeks. That's this one, and this one, and this one. And then we had this low that occurred right there. Now, I want you to note that where the momentum turned negative, the market was under some pressure. Now the momentum is neutral in here, or maybe a slight uptick. So this is not a real powerful upward move on momentum yet. That says that there may be some downward momentum still established out there in the market. We're not really sure. And what we do is extrapolate from the lows and highs that we have in here where the fib extensions are and where we can project up. So we have a projection for this cycle that we're in right now. I'll just blow this up for you to see, of coming up to when you have a positive cycle, but it breaks the 78.6%. Only about 30% of the time will it get up past that high, and that's what it did. So it's an unusual condition that you see there, and this is where the projection would be, right up in these areas of about 45.75 to about 45.80, 45.93, and this would be a good place for it to stop if it wanted to. And then these areas up here, if it really got a lot stronger, which is 46.62 up to about 4,700 right there. And there is, based on the amount of weeks that you normally get a rally, there's probably another month of upward tick in there, and that potential upward ticks until you get into what is that next period of risk right in here. So again, if you look at those yellow zones that you can see right here, those are what we call corrective or declining phases. As you go back here, and you can see how each of those align. And when you get into the periods where those two cycles do come down together, those are called nesting areas, and that's where you can get the biggest drops. But when you have a market that has such a strong upward force going on, that doesn't let these corrections come very far. And what you're looking at since this pandemic low is really historic. The size of this move, the amount of upward momentum that's in there, and this break below the 78.6% right there is an indication that this long period of upward momentum is losing some force, and that could be the beginning, and that's why this period of risk in here could be bigger right there. So the present conditions for the stock market that we have right over here for you to see as of today are that, well, the phase in the market is rising. The momentum conditions may be slightly positive. The reevaluation level from this upward move is right here at 43.34. If it got below there, the market would be likely in a lot of trouble. But right now, that's a long way down before it shows that kind of downside risk. And the sum of the evidence is an intermediate condition that is bullish. So that's what we're looking at right in here. Now let's switch over to the Nasdaq, which has a little bit different picture in here. And you can see in the Nasdaq we have, by the way, these cycles right in here again are aligned very closely to the S&P 500. And let's just look right now where we are in the Nasdaq, and we have, well, a similar condition. We could see the rally going right here, but it tried to get through that reevaluation level and was not able to. So that is, a sign of something there. In addition, momentum, which turned negative right over here and brought this correction, is still negative. So that says to us that the conditions in the Nasdaq are weaker than the conditions in the S&P 500. So while we've gotten a pretty good rebound here in the Nasdaq, as you can see with the stock market, it's just not in as good a shape as we see in the S&P 500. If it does close through 15,430, that would be a good sign. And it tried to do that this week, as you could see, but not able to. And then this period out over here, November, December, is a period of risk, as we showed you in the S&P 500. I just don't have those yellow ovals here on this chart. So the present conditions here that we see in the Nasdaq are different slightly than what we had in the S&P 500. The present conditions have the cycle phase as rising, the momentum as negative, which is weaker and suggests that as it fails in this reevaluation level, that it could give you some downside in here, where the S&P 500 likely would give you less downside. And the sum of the evidence is intermediate, I spelled that incorrectly, neutral. And it's the reason it's neutral is because you have negative momentum in conflict with a rising condition here in this cycle, where our other information that we look at in other charts to show us that the negative momentum and the cycle patterns then turn negative, then the sum of the evidence would be negative. But right now it's neutral. That's why this is gray in the S&P 500 right over here. I'll go back to that chart. I put that up in green so that you could see in there that it's actually a bullish overall condition in the sum of the evidence. So that is a look at the S&P 500 and at the Nasdaq. So, how do you apply this information to your own style of trading? Well, there's tons of information that we have on the markets that we bring you. We have our stock index report, that's SIR daily snapshot, which has a ton of information on short-term, the intraday stuff, the longer term. It's just filled with the information you need to be able to apply this intermediate analysis I just brought you to your own style. Also, you can, if you're a shorter term trader, you can use the SIR live chart stream on the 15-minute chart. We also offer that in our special that I'm going to show you in a second, in using all of our proprietary indicators on all different time frames. Or you can watch Future Speak, where I look at detailed weekly and daily analysis in these indexes and a total of 26 other futures contracts. All that could be available to you right now at the huge cost of nothing. We're offering a preview, a look at our preview services, and you'll be able to get all of that. The daily snapshot, the SIR intraday live chart stream, the multi-time frame chart stream on the S&P 500. You don't need any special platforms. We broadcast this through our platform. You'll get daily trade ideas. You'll get Future Speak, the Slimulator momentum tracker, for longer term, the Slimulator ranking system for the 84 best traded symbols. All of that, 7 days, so you can preview, figure out how to use what we offer on your own style of trading for nothing at all, no cost at all. No credit card needed. Just sign up at askSlim.com. Go to the middle of the page at askSlim and click on Claim Your Free 7-Day Trial. And that will get you in for 7 days, and you'll be able to get a great look at all of this stuff and how to get a good sense for how to apply it to your own style of trading. That's it for everything we're going to show you today. I want to make sure that you do, if you're on YouTube, give us a thumbs up, like this video, and watch our other videos that we put on the playlists in there. Follow us on Twitter at askSlim. And for any information about everything I showed you, you can write to Matt at askSlim.com. I want you to be so incredibly careful because it is so crazy out there. And I'm always wishing you great trading.